Welcome to our special guest, Julian Hanna from Perth. Thank you very much for making the time to be with us today.
Well, thank you very much, John, and good morning to you. And look, I'd like to make a special welcome to any Artemis shareholders who may be dialing in.
That's us included at Lowell there, Julian. So thank you. So the webinar will break it up into three sections. Firstly, a little bit of chat about what's happening in the resources, the junior resources market, in the market prospects section, and we'll get Julian to provide some commentary, particularly on the copper space. Then we'll turn it over to Julian to discuss his lifetime of discovery, and are really looking forward to hearing some of the secrets and some of the things he's learnt along the way in how to discover the big valuable deposits. Then we'll get a little bit from Julian about what he's up to at the moment and what's getting him excited. And then hopefully, as mentioned, we'll have a bit of Q&A. This morning's quick market prospects chat, it's called You're Fired, the fuel igniting the junior resources sector. Okay, you're fired. So Trump would like to fire both of those people on the screen, both members of the US Federal Reserve Board of Governors, obviously Jerome Powell on the left, whose incumbency, I think, finishes in May next year. Trump would like to get rid of him before that. And then Trump has purportedly thinks he has fired Lisa Cook on the right there, a member of the US Federal Reserve, but she's fighting back through the courts. So pretty messy stuff. The impact of that is really that Trump is trying to replace these more independent members of the Federal Reserve with members that might be more amenable to cutting interest rates. It's interesting, we had the Jackson Hole Talk Fest in the US a couple of weeks ago, and Jerome Powell actually was interpreted to open the door to interest rate cuts from what he said there. And so there may be interest rate cuts anyway without Trump's interference. What happened this week? We saw some labour market data in the US come out, which indicated a weaker labour market, which then the probability of a Federal Reserve rate cut jumped to almost a certainty, 96%. And at the same time, the US dollar gold price jumped to $3,570 an ounce, quite a remarkable number when you say it out loud. So there's quite a close correlation between interest rate cuts and the gold price. And if you look at the equities, the junior resources equities, you can see this is a chart in the last 6 months of the Australian junior resources sector, a 26% uplift over the last 6 months, and certainly, getting steeper in the last few weeks as interest rate cuts look to become more certain out of the US. And then possibly more importantly, this is the North American or Toronto Stock Exchange Venture Exchange Metals and Mining Index, so the juniors in North America, and that's up 55% over the same period. And look, when money starts coming back in North America into the sector, then things can really take off. So all looking pretty positive, and we certainly have had a great run. But to put the equities into a broader context, this is the last 25 years of the Junior Resources Index in Australia. Certainly from a low in 2015, we've done very nicely. But compared to 2007-8 and 2011-12, we're still well below the peak. And if you inflation adjust it, then there's still a long way to go to get into anywhere near record territory. So very positive stuff, particularly with that tailwind coming out of the US and in terms of the Federal Reserve. And also another interesting thing that's sort of underlying this is the inflationary impact of the oil price is really moderate. The oil price, in the mid $60 a barrel, inflation adjusted terms, pretty run-of-the-mill oil price is not pushing up inflation, which would mitigate against interest rate cuts. So now I just want to quickly turn to copper and bring in our special guest, Julian, just to give us a couple of comments on the copper discovery story. And here's a slide from BHP and Minex Consulting showing that copper discoveries are getting smaller, they're getting deeper, and what's not on this chart is they're getting lower grade. And you can see right at the bottom of the chart below, a kilometre deep, you've got resolution, which there's another factor limiting new supply of copper, and that's permitting. So the Resolution could be the biggest copper mine in the US, but it's been tied up in permitting for the last 25 years. We saw the leaders of both Rio Tinto and BHP, who own that project, in the White House last month, trying to discuss with Trump how to solve that permitting impasse. But that's another factor which is holding back copper supply. So Julian, just in terms of exploration for copper and discovery of copper, any insights from you as to, sort of nuances on that theme?
I think so, John. I mean, that's a great slide. And, the decline in grade is a big issue. And, copper really is the ultimate critical metal. There's no substitute for it. It's not like nickel, where there's a lateritic nickel kind of alternative coming out through China and Indonesia, but copper doesn't have that. Another way to look at it really is it's been explored for and mined for longer than any other metal. It goes back to the Bronze Age. So, anything at surface has been found or would have been found, in history. 4 types of deposits. The big porphyries, of course, huge contribution, particularly Chile, Peru, North America. They've sort of underwritten a lot of the requirements for copper for a century. The sediment-hosted belts, generally in Central Africa, DRC, Zambia, dominant producers there, but there's something like only 7 copper belts of sediment-hosted style of mineralization on the planet that are known about. So there needs to be more work, more energy, more time, more money going into those types of deposits. And if you look at the copper majors, if it's BHP, Rio, Teck, they are very focused on copper and its future and how they can build on their current declining productions. The third type really is sort of polymetallic, the VMS style that is common to sort of Canada, central parts of Canada, Ontario, Quebec. But again, long history there, and they're metallurgically complicated, and the easy ones have gone probably. I'm always an optimist, so I'm not saying they've all gone, but the best years are probably behind. Then you're sort of left with the last type, which is a big focus here and on this map, the Olympic Dam and the Carapatina, the oxide copper gold deposits. These are the ones that are usually at depth, as they show superbly here, below 400 meters of cover in the case of Olympic Dam and IOCG. They've got an iron component, and they're generally explored for, and that we'll be talking about is one of the focuses of this little company that I work for called Artemis Resources. But that looks to be the future of copper, and it's getting deeper by the day. So it is a very interesting situation that copper and the world is finding itself in.
Thanks, Julian. Just one last slide on copper. On the right-hand side, you can see, on the demand side, it's inexorable growth in terms of demand. And then a forecast from Bloomberg on the left showing that they're predicting a potential 6 million tonne per annum shortfall by 2035, which is very significant given, the market is only about 27 million tonnes at the moment. Just before I turn it over to a special guest for his slides, just a note, next webinar next month, Rob Waugh, formerly of Musgrave Minerals, will be talking about gold on Q. So thank you very much. I'm going to just turn it over to Julian to tell us about his career, the ups and downs, and the learnings that he's had.